Hey everyone, Michael of Seattle here helping you guys become better traders today. Before we get started, there's a windstorm going outside my apartment in Washington right now, so if you hear a lot of wind, I do apologize for that. Now, a lot of you guys in Reddit have been asking me some great questions, so I thought I'd take some time this week to answer a few of them for you guys, since some of them can only be answered using video and actually showing you charts and real-time movements. So the main question I saw, or the largest one I saw that people wanted to answer, is what type of time frame are you looking at when you're day trading versus swing trading versus long-term investing? So we're gonna look at day trading first, then swing trading, then long-term investing, and hopefully, guys, you guys understand what I'm talking about. And if you don't, ask any questions in the comment below, and I'll make sure to clarify anything I need to do for you guys. Now, you can see that in the morning. We're just going to do a brief overview of what's happened to AMC so far in the morning. It spiked up in the morning, crashed back down to $6. That was a huge crash. Came back up, and then it started to consolidate. Then it ripped, and it looks like it wants to rip one more time before close. Now, the 1 minute chart looks okay. You can kind of get a gist of what's going on, but you really couldn't do any technical analysis really until maybe 7:30. Before that, it's all like you're buying and you're hoping. That's all that other crap was in the morning. People buying and holding and trading on emotions, unless they were buying this little double tap right here, which they could have. Now you can see right here at this moment, as maybe about 7:30, we had a chance to do technical analysis because we could have drawn this pennant out right here, and we could have drawn this pennant out right here. Now you can see how it kind of taps. It looks okay. We weren't sure which way it was going to break out, but if it does break out, that's when you buy, right there. That's when you're going to buy, and then you can either sell right here, or you can hold and hope that it goes up for more. I'm the guy that buys here and takes that quick little profit right here, and sometimes I do scale out and let some of my positions ride, but today I was all about taking my profits and just relaxing, because the market as a whole is kind of sucky right now. You got to take these gems, and you got to make sure you're making money off of these gems. Now, that's how I use the 1 minute chart. The 5 minute chart is pretty similar, but you can see pretty much you're just using basic technical analysis to see if the stock's going to go up or down, and if it goes up, you buy, then before it goes up all the way, you sell. Now, if we're going to the 5 minute chart, your perspective will change just a tad, and you can see right here, these lines, they look a little bit uglier, but you can kind of see how they're making out. But what you do see that you don't see on the 1 minute chart is how this holds, the VWAP and the SMA. So if we were to go back to the 1 minute chart very quick, you can see how it was just kind of going up and down. It was crossing the VWAP left and right. Well, you might have freaked out if you thought it was it broke down through the VWAP. You might have thought, based on what you might have learned so far, that it's going to keep crashing back down because it couldn't hold the SMA or it couldn't hold the VWAP. But if you look at it on the 5 minute chart, guess what? Sure, it went down underneath it, but it closed above it. Every 5 minutes, it was closing above it. Closed above it, closed above it. And that's what matters. Closed above it, you're good to go. And that's why it's important to look at these, at least day traders, and the 1 minute and the 5 minute charts. That way it kind of stops you from panicking a little bit. Especially since, remember what I said, a lot of people that bought over here, it was more of an emotional buy, not necessarily a technical reason for buying. They just said, oh my gosh, it's gone down so far, maybe it has to come back up. Which is true, it did come back up, but that was a very risky play to make. I don't want you guys to make those risky decisions. I want you guys to make those well-informed decisions that are possibly more conservative, where you might not make as much money as you want to, but you're going to be making money consistently, and that's the whole point of my channel. Now, if we wanted to, we could even possibly go to the 15-minute chart, and it's pretty much just giving you more of a gist instead of what exactly is happening. You can see how it looks really ugly right here, this technical analysis I did a while ago, but you can still see how it's held with it, and then it boomed, and you can kind of see it in a little bit of an easier way to understand. And it just helps your perception as far as day trading goes, but the majority of you guys will be using the 1 minute charts and the 5 minute charts. I recommend using 1 and 5 minutes. Even sometimes what I'll do is I'll have, let's say AMC right here, it'll be a 1 minute chart, and I'll have AMC right here, and this one will be not trying to change any settings, and you can see what the 5 minute chart looks like right here. Much different, but you get an idea of what's happening. The minute chart makes it look so much more drastic, and this one actually will cause you to have more emotions associated with trading. So if you don't have your emotions under control all the way yet, maybe the 5 minute chart will help you out. It's not too big of a change, but psychologically it could help you guys out. Now, If we want to talk more about swing trading, a good example of that would be Microsoft. Um, and for this, I like to go for usually a day, maybe even 1 to 4 hours, depending on how long you're going to swing. Sometimes I like to swing for a week or two. Sometimes I like to swing just for like 4 or 5 days. So if we're going to swing for 4 or 5 days, let's go to the hour chart, and you can see each one of these black bars represents one day of trading. 1 day of trading. And so you can see you might have wanted to buy some puts right here. And if we're going to do some technical analysis on this, you can see that there was a base support around $240. And once it broke that, it just kind of went kaput. Microsoft's gone kaput ever since. And right about now is where you're seeing maybe it's actually consolidating a little bit, since it's only down to 1% instead of all these crazy crashes that we have seen before. Maybe this would be a good time to buy if you're looking for swinging with a tight stop loss of like $226 or something like that. But that's how I look at it as far as like short days. You're just going to be looking at 4 hours. Even 4 hours looks a little bit better, but you see how much more data you get with the 4-hour chart, depending on what you're looking for. And you can see right here for the day chart, this is what I do if I'm swinging for more than a week. Most of you guys will swing more than a week, so this is how you're going to look at it. You can see I had technical analysis done, tap, 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 tap. And if you're wondering how I drew these lines, just take out the fact that from this line to the right of the screen, there's nothing there. We don't know what's going on. But we do know that, hey, we can build a trend line in here just from the tap to tap, and we kind of just extend it to see what could happen in the future. Same on the bottom. We only have right here, so we have 2 taps at that point, and let it ride. And then we see that it taps again, so it's holding that trend line. It taps the top trend line once. It didn't break out, so it's going to come back down. It hit this one more time, and this is where I actually bought some calls, which paid off very handsomely. But I bought some calls for a couple weeks out because I thought it would probably break out somewhere around here, and it ended up breaking up a lot quicker than I thought. And because it broke out, I ended up selling right around here, not in the 246, but more around 240, 242, which is fine. I went from $213 to $242. That's pretty great if you ask me. And all within a few days. So that's 2 weeks. As I said, I like to trade for a little bit longer than that, because usually all the good stuff happens after you expect it to. But we can see that it broke out, and now it's coming back down to earth. But if you wanted to, you could look at this swing as a chance to look at through the weeklies. So you can see it was 1 week, 2 weeks, 3 weeks. But remember, I didn't sell at the 3 week. I sold here, so 240s. So that was 2 weeks and a great profit because of it. Now, when you're looking at these as far as swinging your trade, you do have a lot more options than you would if you're day trading or long-term investing. But at the same time, you're just trying to figure out the best way to make your technical analysis work for you. So from my style of technical analysis, I personally like the week and the day. Some people even use the 4 hour, because you can see how kind of clean it looked right here. 4 hours, 4 hours, 4 hours. Maybe if you're looking for a precise place to buy and you're trying to get your full money's worth, okay, do that. Because you can actually see that it didn't ever actually tapped all the way on the trend line. It got pretty close. So if we go right here, we can see the trend line is right there. Sorry, it's kind of hidden the way this graph is. It didn't hit the trend line, but it got very close for a couple days. Very close for a couple days. And then you can see it started to break out and do its other fun stuff. And you can see it actually broke out one more time, and I played that one, but I didn't make as much money because you see it actually didn't decide to rip, which was kind of a pain in my butt. But that's how I look at swing trading right there. Now, for long-term trading, this goes beyond technicals. It goes beyond how you look at the charts. Let me just go to Tesla, because this is a good example. Even Tesla looks all droopy right now. When you're long-term and when you're trying to become a long-term investor, and this is more for your retirement account or just where you're putting your cash to let it grow while you're trading stocks and things like that, because if you have money in the bank and it's not being put towards bills or anything else, like, you're wasting your money by leaving it inside of a bank. So what I do for long-term investing is I look at the daily chart, depending on how long-term, like this is like a year out, or I look at the weekly chart, weekly 3-year. You can see how fast Tesla's just kind of boomed from its low of 35. And you can see it's probably going to start this huge pennant here. And the whole market might actually start doing this huge pennant movement right here, just because everybody's terrified of what the economy is going to look like as we reopen, and we're not in this fairy tale land in the stock market. I look at it in weeks and days. the only thing I have to say about this is fundamentals change everything. You have to make sure you pick a company that's fundamentally sound, which means they're making a profit, or they're paying off their debt, or they have some type of great technology that can be utilized in the future if you have that type of foresight. But long-term investing is mostly about fundamentals and trying to pick out the good ones. A lot of you guys have seen me pick out some penny stocks that are for long-term investments, like GCI and things of that nature. Now, those are much more about fundamentals than they are about technical analysis because I'm holding for a longer period of time. And since I'm holding for a longer period of time, I know that they're going to go up over time. So which means I don't have to worry about buying at the right price because it probably will go down, it might go up, whatever. But my goal is that in 50 years or 40 years, 30 years, whatever, I've made enough money to justify buying that price anywhere around where I was thinking about it. So that's a pretty standard idea of how I look at this. 1 minute charts best for day trading along with the 5 minute charts. 15 if you really want to get in there, but I don't find a use for it. Maybe the 30-minute chart if you're looking for more of a reason. Like I said, it's kind of how it's holding these VWAPs, it's holding the SMAs. You're looking at it more like minute by minute of what's going on. For swing trading, I like to go hour all the way up to day, depending on how long I'm going to be swing trading. If I'm swing trading for less than a week, I will go more to the 4 hours, 1 hour to 4 hour type of time frame. If I'm going to a longer term swing, which lasts like over a week, it'll be most likely the days, maybe 4 hours, but mostly days, maybe even a week, week time frame. And then if I'm long term investing, I'm definitely looking at weeks, and then we're going to be looking at more of fundamentals and the PE of a company, how much debt they have, a whole bunch of stuff that you guys probably haven't learned yet. But in the description below, I do have some book recommendations if you guys are trying to get into technical analysis a little bit more and just understanding the basics of trading. So if you guys want to look at those, feel free. And that's it for everybody for this video. I'm going to take some time tomorrow to answer the other question about as far as blending technical analysis and fundamentals. That's a very hard thing to do, especially if you're long-term investing, because fundamentals can change very easily, and you kind of have to set a plan for yourself to update how you're doing it. So that's it, everybody. Hope you guys had a fantastic day. Please make sure to follow the subreddit Wall Street Flow, and thanks for subscribing and liking the video. Thanks, everyone, and hope you guys got your questions answered.